Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Monday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. It's going to be one of those days, folks. Just when you thought you were out, they pull you back in with that volatility. So we'll talk about that's pretty much the story of the show today. Pretty much is just the overnight weakness here and how we're positioned for the week of the COVID trade, the coronavirus trade, whatever you want to call it. Back on here this morning, a weekend full of headlines about rising case counts, both overseas and in the U.S., particularly in the South, Southeast, and Southwest. So that has the market in a tizzy this morning. I'll let Joel come on here now. Joel, why don't you unmute yourself and give us a quick update here on what is happening here overnight, or at least this morning, because it's not looking good.
Good morning, and traders and investors around the world. Welcome to this Monday edition, Benzinga's PreMarket Prep. Not looking great here this morning. Kind of a choppy day on Friday. We were up, we were down, and settled just over 3,000. Bad news overnight, folks. The bad news is that we're down 57 handles. The really bad news is that we were 40 points off the low. We got down to 29, 23, 75. We haven't seen those levels since last month. We got a nice bounce. We're trying to clear last week's low. That's my number for this morning, 29.71. That was Friday's low. We're trying to clear that. Pre-market high, 29.9775. I guess I could cancel my orders at unchanged on the session. 23.75. We will not be seeing that today. Crude in the red by 88 cents at 35.38. Gold not acting like a safe haven, down 23 bucks at 17.0630. Silver closer to 17 and 18, down 33 cents at 17.15 and a half. And Bitcoin just can't clear 10,000. Been major resistance there, down $320, 9,145. I know Triple D is in the trade cave here and pretty busy this morning, so he will come on as he can.
I'm here.
You're here?
Oh yeah, I'm here. There was a little bit of the SP spells like 6-7 handles, and I was like, fell, and I was like, okay, gotta go for a minute here and move some orders around. So obviously, it's a lot of volatility again here overnight. I kind of suspected that we were going to sell off over the weekend, so I biased myself short, which is should
nice.
Hopefully pay off
a little
here
bit
this
here
morning.
Too.
Oh, well, the reason was, and obviously I came on bearish on the show on Friday, when we were up 309 or up to 309 on the SPY, and we were during the pre-market there. We opened near the highs. We hung out there for a little while in the morning, and then we started to leak. And this is typical. So for you newer traders out there, when you get a big flush, and this is we're talking about the Thursday flush when the markets drop the big 1,800 Dow points, you often get a little snapback rally. You get a little bounce where people are coming in, okay, I want to buy the dip. I want to come in and buy these stocks on the cheap. Usually that initial snapback rally is faded. And that's exactly what we saw. It was textbook. We held up for about the first half an hour of trading in a lot of stocks, and then they just started to succumb to the selling pressure. People nervous from before. A lot of people were in airlines, and they were getting their money back from the day before. I used the opportunity to lighten up stocks that I had bought the day before as well, because I'd bought some stocks thinking on Thursday that, well, we could bounce here, and, we continued to leak. And then we did get the bounce overnight on Thursday night coming Friday, and we're trading up significantly in a lot of stocks back to where they were trading even earlier on the Thursday. It gave you an opportunity to get out. So I lightened up a whole bunch of stocks, sold my Spotify, sold my TD Bank, which I bought the day before, sold a number of stocks into that rally, and obviously now we're looking at the market significantly low, about 100 points down from there. So the question now, what do you do now? This is a real battleground. This 3,000 has memory. It's been here. It's probably going to be a battleground too. I don't think they're going to flush at another 1,000 Dow points today. I think the flush already
That's not the way
happened.
they do it, Dennis.
How do they do it? Tell me how they do
you to
it.
death. They nick you.
Yeah,
Just kind of like on the way out. I just want to throw one thing in here. We weren't up a little bit Friday morning. We were up a lot.
a lot. It was a
We were,
gift.
yeah. And, one thing I think you guys heard me talk about is like the average daily trading range, right? Like how much expectations do you have a stock or a future to move? And we had already exceeded my target for the day. That means for the whole trading range for the day. So when we went another 10 points and could it hold, that was really bad. That was a bad sign here. But I just want to throw it in because sometimes if you come up your 30 handles, but your range is only 35, then you can expect, more of a run. But we were up 60, 70 handles already. And the average daily range, I think, on Friday was about 70. So I just wanted to throw that in there.
Like people who are buying Friday morning, it's very rare to see. If you're buying Friday morning, you're basically saying we're gonna get it all back, and it's very rare to see an 1,800 point Dow move down and then just see an 1,800 Dow point move up. You're gonna see this very rarely ever happen. Usually, there's a move down, a little bounce, and then a continued move down. And it's a textbook. This is all textbook stuff. So for the newer traders, you just gotta, be careful. When you see a big flush like that, what happens is you have the short-term money caught. So all the day traders, especially the newer ones, there's 2 months of new traders in here that have only seen it up market. And they've been rewarded every time they've come and bought that dip. So that's what you saw Friday, these newer traders coming in and saying, oh, yeah, this is a dip. I got to buy this. Well, it's not a dip anymore if it's bounced back half of the losses. So if you're coming and buying American Airlines Friday morning, you weren't buying at the prices that it was Thursday night. You're buying, American Airlines 10, 15% up. So that was the opportunity to sell, not buy. And now we're going to go down and we're going to retest those lows probably. Again, all that's going to matter going forward here, it didn't matter. The virus didn't matter for the last 2 months. We were reopening. It was all good. But now all of a sudden, you're seeing some states, you're seeing some problems in China, you're seeing the virus perk up here again. So the market is now, again, looking at the numbers on the virus, and they're nervous. And over the weekend, the numbers weren't great again. Spencer, what happened over the weekend with the virus?
Yeah, in roughly half the states, or maybe a little bit more now, the number of cases is increasing. The daily new case rate is increasing, particularly in the South and Southeast, Southwest. California is a hot spot. Florida, North Carolina, Texas, Arizona. Those are all states that had over 1,000 new cases. This is as of yesterday. So it was yesterday and also that same number on Saturday. So you're seeing the case rate pick up in like I said, in at least half the country. Also in Beijing as well. They shut down a seafood market again. So we wondered last week what a weekend, as I said, what a weekend full of headlines like this could do. Right, because we saw this happening last week. We saw it in Arizona, we saw it in California, we saw it in Texas, we saw it as far back as like last Tuesday, and we wondered, well, what would a full weekend do of headlines about rising case counts? And now we know.
I mean, and if you look back to the history of the Spanish flu, it wasn't the first wave that got everybody; it was the second wave. So, and you just think about, now everybody's kind of going back to the usual ways. I mean, I've got looser. I've seen some people that I hadn't seen before from a distance, but, I was kind of very strict on real lockdown. Now I don't even want to go outside and kind of talk to my neighbor type of deal. But, now I've loosened up a bit. I'm not cleaning my groceries as much. I've loosened up a little bit. So if I'm loosening up, there's a lot of people that are very much loosening up and just kind of going back about their business. So it's not surprising that you would start to see an uptick here. Again, I kind of thought, Scott Gottlieb had said that maybe the weather would counter that. So, you're getting warmer weather, people are outside more. It's not going to be as much, increase there. So maybe we just kind of see the curve flatline here for a little bit. And I even speculated that it might not be that bad, until we get late into summer and into September. I do suspect a second wave. I always did. That's why I kept a lot of cash in my portfolio. But it looks like the summer isn't helping that much. So that's a concern as well. So lots of reasons to be concerned here. The biggest thing, though, to understand is if, and Mnuchin said there's absolutely no way we're going into a second lockdown. There's absolutely no way we're shutting the country down. Well, that's not Mnuchin's call. That's an individual state call as well. The states can do what they want to do individually. So we know there's more aggressive states like Michigan that was shutting stuff down very quickly. There's other states that were hesitant to shut down. So it's going to be state to state call. But if you get to a situation where there's hospitalization starting to go way up again, there'll be some more policies coming in to not maybe necessarily throw us into a full lockdown, but to social distance. And the last thing people are going to want to do is fly on an airplane. So the airplanes are still ground zero for this. Now, you've got a significant pullback, and if you do believe we're going to get ahead of the virus and we're going to be okay and the airlines will be able to survive for the next year, even, with the lower volumes, then, now is the time if you wanted to, not chasing American Airlines up at $22, but now you're down here at 15. I would say I'd use 1407 as my out. If you wanted to buy the dip today, and I'm not picking on airlines, the stocks I've been picking on is tech stocks that are doing well. But I'm
picking
just setting
on
up trades.
meaning in a good way. Picking on means stocks that you're buying.
like coming in and buying stocks. If you're talking about the stocks I want to buy the tech stocks on pullbacks. I've always been, heavy in tech. Tech has been performing. I mean, the airlines weren't great stocks even before this thing started.
Correct.
I mean, look at the American Airlines chart. You think you're buying a good stock. Well, before this bloody thing started, American Airlines, so the last 2 years have been going straight down from 50 to 30. So they weren't firing on all cylinders. So you look at it here and you think, if you want to go, and look at these stocks that have really been beat, the reopening stocks, you're getting an opportunity in those now. So chasing is not the thing. You're definitely not chasing now. American Airlines is now 7 points off the highs, the 2280, when you could really feel that upside capitulation day when we called it on this show. But now you look and you think, okay, 1407. So I have myself an out at American Airlines. Let's go look at Delta. Same story. You got the low 2660. So if you're buying this morning 28, I'd stop myself out at those lows. I don't want to see the stock make a new low on the move, because then I get concerned that this could really get ugly. So you could set up a trade. You could do it and say it's going to bounce. I don't know if we're going to bounce. I don't think anybody knows. This is a real tough market to call. It's going to be a battleground of 3,000. I don't think anybody knows if we're going to bounce right back or if we're going to continue to leak here. But if you are inclined to buy the dip, what I'm telling you is have yourself an out. And I would stop myself out at Thursday's lows on all these stocks. And obviously there's some stocks trading through Thursday's lows, and maybe those are no touches, but there's a lot of stocks still holding on to Thursday's lows. Norwegian Cruise Line, 16.45, it got down to on Thursday. It's 18.25 this morning. So that would be my stop out if I was buying these things on the dip.
Couple caveats here before we drill down into some of the technicals on this stuff. Number one, you will get people saying more testing, more cases, which is definitely true.
For sure.
Right?
Yeah.
You're okay.
Yeah.
The second thing is that people were saying, well, the cases are going to be where the protests were. All right.
Well, the protests were everywhere, though.
The protests were everywhere, but there were major cities in Detroit, and, knock on wood, I haven't seen or heard of a major resurgence. Now, Michigan stayed, closed sooner and stayed closed sooner a lot longer than other states. So we're going to see how those correlations work out. The other thing that I wanted to say is forget COVID. Okay. Forget all this stuff. What do we have at the end of this week? When do you have major turns in the market? When do you have excess volatility? Every quarter. Come on, guys, wake up.
No, I know. I'm waiting for. I thought Dennis.
I thought you were just asking yourself. So
quad witch.
I ask myself questions all the time and answer them. So
right, you have a quad witch, and it's offer major turning points in the market. I talked about the rollover last week, and it was a weak rollover. The open interest is shifting over now. Now, I mean, and the other thing too is that a lot of this drop, man, unless you were coming in short or playing it overnight, man, you're not catching much of it. Kind of like on the way up, it was that sneaky rally on the way up. You come up 50, and then we'd hang out, up 40 on the day.
We haven't been going up. It was the overnight ramps we were talking about forever. Yep. It's ramping overnight. I mean, I've talked about this. This is why I've switched my trading to overnight, so I can capture these moves. I'm done with, just to sit in intraday and watching a thing chop around. I want to see moves. I want to get feel. It was good feel on Friday that I thought that the bounce would be faded. So I'm getting paid for that call. And, and obviously leaning more towards the short side. Now, obviously my long-term investments are a different story. I always stay long-term invested, but that's a different story. I'm putting my trading hat on and I've been leaning short. I leaned short Friday and I leaned short this morning. And that's where, you make these calls, these intraday calls, and, or these, overnight calls, and there's opportunities there. The big moves are made overnight. I've always, I moved 10 years ago to overnight trading because that's where the money is. I'm going to go to where I can make the most money, and I make the most money trading overnight.
All right.
I just want to give my condolences to JV Speck. His aunt died from COVID on Saturday.
Oh,
JV
no.
Speck is a great person in her chat. He's in there all the time. He's been in there for years. So JV Speck, you have her condolences. Sorry for your loss. I mean, this is touching people that we know. When you have 100,000 people dead from COVID, it's awful. And, if the numbers keep going up, eventually it's going to touch everyone. Everybody's going to know somebody that's died from this. It's horrible. You can talk the markets about it, but, these are real people. These are real people that have lost from this. And, it's a really sad thing. And that's why I would say exactly what they're saying on TV. Wear a mask. People don't want to wear a mask. They say, I won't wear a mask. But you know what? You're not just protecting yourself. You're protecting other people from spreading it. So if you're going to go out in public, put some type of face covering on.
I think
because
that's
you don't know.
Part of it. That's part of it. It's not just the reopening. It's not just that. It's the reopening and the fact that a lot of people aren't wearing.
They refuse to.
Right.
I mean, Nick Shaheen was on this show and said he absolutely refuses to wear a mask. Nick, we respect. We like Nick a lot. I wish Nick would wear a mask if he's going out, though, because it's not just about yourself. It's about what if you've been in contact with another person, you're asymptomatic, but you're still spreading, and then you talk to another person and they get sick. I mean, how would you feel? I'd feel very bad if I, didn't know I was sick. I went out, I talked to somebody, then they got sick from me afterwards. I mean, and maybe it's a person with an underlying health condition that isn't going to be able to fight it off as well. So when I go anywhere in public, I'm wearing a mask. I mean, you don't have to wear a mask in your own home, obviously, and stuff. We're not saying, you
Actually, I do when my mother-in-law is over.
Well, it's not a bad idea. Yeah, if somebody else is over. Yeah, I mean, that's not a bad idea at all.
Yeah, she's recovering. Yeah, she's had some serious illnesses, and when she's in the house, and we try and eat out inside and stuff. That's what I do. But another thing too, and Dennis, is almost like you were talking like to Lisa over the weekend, because what she's been saying this whole time is like, find me a pandemic that doesn't last at least a year. Find me a pandemic that doesn't have a second wave. And it's just not possible. So
this isn't going away.
It doesn't necessarily have to get as bad as it was before, but let's not be naive here. Looking at, past history of pandemics, they just don't disappear all of a sudden. So how it's going to affect the market, we see the volatility. Spencer took all the signs down. So
why did you take the signs down, Spencer?
Yeah, Spencer, you didn't check with us.
Why did the signs come down? Here, I'm going to lower my.
Because I'm coming to the office now, and right now I'm the only person in here, actually. But I'm coming to the office, and it just felt like it was time. I don't know. I got tired of looking at them after 3 months. We have pictures.
We love the signs.
Well, it's not like there wasn't stuff there before. I took it down, and I wanted to put it back up. I got tired of looking at signs. I'm coming into the office. I don't have unless I guess I can take the signs and put them behind me. I guess I don't know, but
you're the only one in there today. Where's Luke and Jason?
I am the only person here right now. So
most of Benzinga still working from home.
Yeah, almost everybody. There are a small, like less than 5 of us have been coming into the office.
Lunch is on me for the office today. Everybody in the office.
Joel's gonna take that day. I would have taken that day too.
Thanks, Joel. No, yeah, it's fun. It's just it's what I was saying earlier. It's not just the reopening. It's the fact that people aren't wearing masks. We went out for breakfast. We haven't gone out for breakfast, which one of our favorite things to do. We went out on Saturday. We were like the first ones at this restaurant for the day.
Where'd you go?
Just a local place, a local diner near us.
Scramblers?
Actually, yes.
Called it, Joel knows.
Big omelets, man.
Anyway, no. But we wore masks, and then you take it off to eat, of course. But we were the only people there when we got there. First time I'd done that in 3 months. So I don't know. I'm just trying to get back to our lives here,
Yeah, I agree.
But it's tough. So I'm just
try to go back to your lives.
And you know what? It's one of those things where it's like I went from. I think I may have mentioned this a few weeks ago. I was all gung ho mask. If you don't wear a mask, you're putting us all at risk. But the more you see other people not wearing masks, the more it like the social
Right.
you pick up the social cues off that. Well, if they're not wearing a mask, and if they're not wearing a mask, well then why should I wear a mask? You know what I mean? It becomes easier to justify not wearing a mask if you see everyone else. Like looking at all those protests, one of my biggest takeaways aside from the protests themselves was, wow, almost nobody that I'm seeing is wearing masks. So it must be, you can almost convince yourself like it must be okay. You know what I mean?
I agree. It's tough. Like, I mean, you're setting an example by not wearing the mask that it's acceptable to not wear a mask. And then, other people think, okay, well, I'm not going to wear a mask either because I'm uneasy because you're not wearing a mask and I don't want to wear a mask. They're horrible to breathe in. Like me and my wife went out yesterday and we both had N95s on, and Laura gets back and gets outside and she's like, I can't take it. This N95, like just having it on, like it's so hard to breathe in. It is tougher to breathe in a little bit, but I mean, we're tough enough. You can tough it out if you go into a store, if you got to go into a place, where it's unsafe for 20 minutes. It's not that hard to have the mask on. Breathe. You can breathe in it.
Lisa wears one all day long.
Exactly. So exactly. You have doctors that have to wear these things all day long, like Lisa. We can't tough it out for 20 minutes in a place. I mean, tough it out. That's what I say. So, I mean, people get upset, and people are upset with me saying that you should wear a mask. But this is my opinion, that if you're going to go out, we're going to let's just put a scenario out there. If we just go about our business and go back to the way it was, COVID's going to take off again. We're going to be right back in the same situation. So if we're going to go about our business, we've got to do it in a smarter way. There's no way that we can just go about our business and expect that COVID's just not going to start to pick up again. Some people believe it's just the flu, but I've seen these x-rays of these lungs and stuff, and I think it's I think it's crazy to think that it's just the flu, but people are entitled to their opinions. But all I'm saying, even if you have your opinion, you should respect other people's opinions as well. And there's a lot of people out there who are very scared of this virus. So that's why I say wear a mask.
And it feels like we all kind of decided, and we'll move on back to stocks after this.
Yeah, we're going back to stocks.
Yeah.
People are
it just feels like everyone decided that, it's over. It feels like we all just collectively decided the market was going up. We're going back to new highs. It's over. Crisis over. And this is
what this reminds, and I hate to say,
call. It's a wake up call.
I hate to say this, but when, Dennis and I originally freaked out, like at the end of January, and the market just went straight up. Remember that? To new all-time highs? Straight up.
Yeah. It wouldn't stop going up. I got the whole first round of puts expired worthless. You did too. We had puts on the airlines. We were like, I'm protecting my portfolio, and I'm going to, and this market should roll over, and had the one little blip in January, then went up for a month. I was 3 weeks early on that.
I know.
So, I mean, it's the same thing. We've been going up. The virus does matter, folks. And people don't want to talk about the virus, and they just want to forget about the virus. They want to talk about stocks. The whole reason we're down 2,500 Dow points last 3 days is the virus. This is the reason.
It didn't matter for the market for a month and a half, though, 2 months, which is why people,
because the numbers were going down. Then we were high. The numbers were peaking in April. And then in New York, remember, I even tweeted out, we're going to have this flattening the curve rally because New York's numbers started to look a little bit better. And we went straight up ever since because the numbers kept coming down. But now the numbers are going up again. And if you chart this, and look at the COVID cases and look at, and the S&Ps, there is a correlation here happening. When the S&Ps, when the COVID numbers were coming down, the S&Ps were going up. When the COVID numbers are going up now, the S&Ps start coming down. So I'm telling you, there's a trade there. It's the reason that I saved myself a lot of money in my invest portfolio back in January, was watching what was happening in China. Same thing. It's the reason I stay in cash, because I think the second wave is going to eventually come. Is this the start of the second wave? Depends on what we do. It all depends on what human interaction is going to look like. If we're all going out wearing masks and being safe about it, maybe we can avoid a nasty second wave. But if we all go about our business, I think it's inevitable as second wave comes. So let's move to stocks.
Okay, just one more thing. Just to complicate things, we don't have worldwide racial tensions and riots going on everywhere.
That's true.
So that I'm no economics major, but that can't be good for the economy. That can't be good for store owners that are struggling to get back on their feet. So you have a second dynamic here that you didn't have before. True. And I just want to make. Okay, Spencer,
Back to
Yep.
stocks. I want to talk about Hertz here. I was
Oh,
very surprised to see them get permission on Friday
Yeah.
from a bankruptcy judge
Yeah.
to do a shelf offer,
This
to
is
do an
awful.
offering of $500 million worth of common stock. And I want to pull up in the Benzinga Pro here. I'll pull up a newsfeed from of SEC filings here, and just so you can see why I'm so perturbed by this. I mean, it's a creative way of raising money, I guess. But look at all these insider sells. Ready? Insiders are selling heavily into this offering. Okay, here 1, 2 on Wednesday. Okay, last Wednesday.
These
Go
are
back
smaller
to
insiders.
yeah, but keep going back here. How many sells? This is from June 5th. 1, 2 more on June 5th. Go back to the 3rd. 1, 2, 3 more on June 3rd. Go back to May 29th. 1, 2, 3, 4 on the 29th. The insiders are go back 27th. 1.
Well, that's
So
Icon. It's on the bottom. There's look at Icon. It's on the
yeah,
bottom.
yeah,
Holy mackerel,
that was
55
him.
million
Wow,
shares.
look at that. So
I'm out.
my point is the insiders are selling
I'm
into this shelf offering.
going to take this a step further and bring this back to the markets, because maybe it's selective perception on my part, but I tell you, I watch all these SEC filings all the time very closely in the Pro, because there's trades off of them. There has been, I've watched these for years, and
overall.
like I said, maybe it's selective perception, but there is so many insider sells in the last couple of months. So many. And I feel like this whole market rally is like the company execs are saying that the Wall Street is selling to Main Street. And I feel like that's been happening here for the last 2 months, where you're just seeing huge amounts of insider selling, because they know that their companies are having major issues. And if the market wants to be dumb enough to bid their companies like Hertz up to $5 or $6 when the company's bankrupt, they'll sell it to them. I mean, and we saw it with Moderna, got a lot of headlines with their selling, but this has been happening on all the stocks. And you know what? It's not that they're doing anything dirty. If the market wants to bid up stocks to prices where they feel like their stock shouldn't be, I mean, Elon Musk has been publicly saying, he's publicly said at $740 that he thinks his stock is overvalued. Well, if you think your stock is overvalued, you're probably going to sell some of it. I'm sure there's a lot of execs out there that are thinking, wow, here's my, looking at my stock, like even looking at Disney. And I don't know if there was any insider sells, but I mean, here's a stock that went to $127 last week. The bloody parks are closed. They're going to reopen them. It's 38% of the revenues. The parks are closed. The movie studios, they're going to reopen them, and that's great news, but they're not going to reopen and be at full capacity. Their revenues are going to be depressed for a long time. So you're telling me that Disney is worth as much as it was when this thing started? It's insane. So, and the pricing is coming back down a little bit more to reality here. Do we get crazy again? Do we go 1999 style and they just buy all these things? It's possible. But at the same time, my investment dollars go into sound companies that are firing on all cylinders. And there's a lot of companies that were just getting money thrown at them that are definitely not firing on all cylinders. And Hertz is the poster child for that.
Oh, I just want to bring this up too. And I did the pre-market prep stock of the day on Friday. I did it on Hertz. Spencer, can you bring up the monthly of Hertz?
Sure.
Because I don't know what Wall Street was thinking, but they did a dog and pony show in 2016, and they laid out a 3 to 5 year business plan back to profitability, right? And that stock, I think it was traded single digits or 15, 20 bucks. It reorgs at like 45, 50 bucks. And then goes up to 55. And then look at the performance since then. So a hook, line, and sinker, man. The street. So that's why, I mean, you see it traded down 73 cents. Don't they need to sell that million shares at $4?
I don't know. They're just trying to raise any money they can.
The billion?
Ideally, they'd love to sell and raise that up, but they're going to try to try and sell 500 million worth of stock. Is that what they said?
Yeah.
What's the offer?
Billion.
How much?
Okay, so originally
no, it's lower than that now. 500 million.
Right. So
Yeah,
they
it's
wanted
down to
to,
$250,000.
they wanted to raise $1 billion. In order to do that, they would have had to sell shares at $4. But they got permission to sell up to 500 million worth of stock.
I mean, any money is money for them, right? They're trying to survive here somehow. So is there going to be anything left for the shareholders that are taking this offering? I don't think so, but who knows? I mean, people think it's possible. So, obviously on Friday's action I felt like crazy too, because here's a company that announces that they're going to seriously dilute whatever equity is left, and the company rallies from 250 to 350 on that, that's good news. So you're getting punished for that too. And I think it's deserved. I think the people who were buying on Friday were very uninformed on how this stuff works. Just because they're going to dilute the hell out of it to survive doesn't mean the stocks should go up. The stock should go down. It's diluted. That means there's more shares out there. It means your percentage ownership of the company will be less. And this is a bankrupt company owned in the first place. So I don't think anybody should own it in the first place, but that's my opinion. It worked very well for people for a few days. But to be up on Friday on rumors that they were going to dilute the hell out of their shareholders seems insane too. So, and now it's deserved. It's down at 212 from 347. It's back to where it should be. And I don't know where this offering price is going to be. I don't know how it's going to go. We know we had one airline, remember, a few weeks ago trying to raise money, and it didn't go that well, and they only got a portion of it. But let's see if they can raise it. It sounds insane to me that a bankrupt company can raise equity on potentially shares that are going to be worthless, but this is the market environment that we're in.
Have you been watching the bonds? Have you been watching the bonds at all?
What are they trading at, Hertz?
I don't know. I mean, just from what I read over the weekend, don't quote me on this. I guess the only some of the bonds were still trading at like 30 cents on the dollar or something.
Yeah, but the bonds. So in the case of a bankruptcy, for newer people out there new to investing, bond holders get paid in whole first. Whatever is left, and then they go to preferred stock if there's preferred stock there. And whatever is left over after everybody else gets paid is what you get in the event, of a full, bankruptcy. So, that's how it works. But, typically in these things, when they're doing the reorg, what Joel's talking about is they wipe out the equity holders, and then the bond holders become the new equity holders. So they get the debt down and the bond, and then a company's can often, come back from when they've got this debt load off of them. And then the debt holders, that's what happened with GM, the debt holders became the equity holders. So anyways, that's, just usually how these things work. But this is a market environment that a lot of funny things have happened. So, who knows really how this turns out at the end. But I'm not putting my investment dollars into a bankrupt company.
Real quick, Genius Brands just caught a bid off a PR that Arnold Schwarzenegger has become a significant investor in the company.
Okay.
This is this market. Okay. I love Arnold. I'm a big Arnold fan, so
so you're buying the stock.
You're buying up a buck here.
I don't even know what Genius Brands does.
It's
I don't
even know what they do. I know everybody's been talking about it. What do they do?
It's like the children. They produce children's shows. They're like a media company for kids.
So he's gonna do Kindergarten Cop?
Actually, yeah, he does have a show called Stan Lee's Superhero Kindergarten.
There you go.
There you go.
I love Arnold. I've always been a fan of Arnold. I mean, think about the success this individual has had in his life. They're one of the most successful humans. It goes from world champion bodybuilder to, movie, to governor. Unbelievable the success that this person has had in his life. I love Arnold Schwarzenegger. Should it be getting a pop for that? Sure. I mean, I think it should get a pop for that. I don't know anything about the valuations. I haven't looked at this thing at all. But you think about the Oprah factor with, obviously
Weight Watchers.
With Weight Watchers, you get Arnold behind you. I don't think it hurts. So I think move's justified. Although I don't know anything about valuation. I'm assuming the valuation is probably insane on this. But just because that's the way this market is. But 11% move up for Arnold, sure. I think it's justified.
You just got to pop to 494. You backed off a little bit. I would just look at the 3-day high at 580 if you're looking for a target on this. And supposedly, I did do this stock of the day a couple of days ago, and supposedly they're supposed to be on some pretty big platforms. And this is just supposedly, and then it got citroned that one day when it got up over $11. So a couple different factors in this. Invest at your own discretion.
Yeah, you definitely don't know.
It's a high risk play right here.
Exactly.
You don't know where Arnold is invested from. All right, let's bring on our guest today, Kevin Davey from KJ Trading Systems. Kevin, good morning.
Hey guys, how you doing?
We are doing okay. How has this market been treating you?
Just the last few months since the last time I was on, it's just been crazy. I mean, things are happening, and you guys have been talking about it, that just seem out of whack. And so the neat thing about that is there's been a lot of opportunity that maybe 6 months before all this started just wasn't there. I mean, the volatility helps a lot of traders, and that's kind of what I've been finding in my own trading.
All right, Spencer, do I need to share my computer sound here or not?
No, you don't.
I don't. Okay. Let me see if you guys here. I got Genius Brands up there, but no one wants to see that. Tell me when we're good, Spencer. You got my screen up there?
Yeah, we're good.
Okay. First of all, Kevin, I drive everybody crazy talking about rollovers, and especially in the S&P 500 futures contract. And you're an experienced futures trader. I talked to you about it a little bit over the weekend. What's your, it's really complicated in crude, as you saw when it went from it went down to -40. How do you approach the rollover in futures contracts?
It's a good question. So when I develop trading strategies, I use what's called a continuous contract to test with. And what that does is it automatically accounts for rollovers on a certain date, with the ES every quarter. With like crude oil, it's every month, it's a certain date. And the trick with trading these things live when you've back tested a continuous contract is just to make sure you roll over any positions the same time the data rolls over. So where people get in a lot of trouble is what they'll do is they'll test with all this rolled over data, that goes back 10 years, but then they'll trade live just on the front month and they won't know when it rolls over. And a lot of times some squirrely things happen during rollover where spreads between the calendar months just get out of whack. And the ES is not as bad, but crude oil was a good example where in May people were trading that front month even though it was rolled over, and a lot of them got caught when crude oil just plummeted a day or two before expiration. And really, if you're going to trade those markets, you should be out of those front month contracts when the rollover before.
Even though the data doesn't switch over and the volume doesn't switch over, because I watch it on the ES and the open interest is slow to. I mean, it's making a little bit of progress today, but the open interest really hasn't shifted over yet. So I don't know. I mean, I went to the contract on Friday, the September, just because it blew away all my June numbers. But okay, so all right. I'll look at that and see if I can incorporate that into my systems trading. You got some positions and stuff. I want to just go over these real quick. This is a great segment. You're flat the S&Ps, huh? Is that because the week of rollover here, or you're just not getting any signals?
Just not getting any signals. So, what happened this past week where it plummeted and then it came back, and so there's a lot of indecision. So sometimes the strategies I trade just kind of stay on the sidelines a little bit, and that just happens to be right now.
No,
so sometimes I'm in it, sometimes I'm not.
Got to be in it to win. And just one other thing, we go to these other stocks. Are you trading just one system for each commodity? We will look at the U.S. bond here, or are you running multiple strategies within one commodity?
Both. So some commodities, some futures, I run one strategy, and some markets in the U.S., the 30-year bond's a good example. I have multiple strategies that I run. And sometimes they are in the same direction, sometimes opposite, but they over time they work pretty well together. So I have some of both.
So you let things just run, like you program it and you go to sleep and you don't even wake up in the middle of the night. You just let these puppies run, huh?
Well, yeah. I mean, I do wake up in the middle of the night a lot of times just to check on positions, and because you really have to kind of keep an eye on it just to make sure nothing crazy's going on. And by crazy, I don't mean the price is moving, but I mean
your system.
Maybe it sends a phantom order or forgets to send an order, things like that. Internet connections, all that kind of stuff can happen. So you got to really keep on top of it. But yeah, I just let the signals do what they want to do, and I try not to overrule them.
And it's all technical, right? You're not using any fundamental information.
Right. No fundamental information. I use indicators, patterns. I will use seasonals. And so I guess you could sort of count that as fundamentals, So for example, like with soybeans, you could say, hey, soybeans have a tendency to go up a certain time of the year related to harvest or,
Okay.
but no true fundamentals. No.
All right, let's see if we could get through a few of these here. As of yesterday, you were short the 30-year bond here. And go ahead, talk about that position.
And today so far, that's not turning out to be that good. But, that's one thing. If you try to do this kind of algo trading, you can't be stuck looking at the monitor all day because it'll drive you crazy. You just got to let the signals go and, hey, if my stop loss gets hit, then I'm out. And if it turns around, that's fine. But I try not to get caught up in the day-to-day thing because I used to do that and it just drove me nuts. And you can't.
Will you reverse on a trade where you exit?
Sometimes, yes. So the way I have a lot of my algos set up, they are stop and reverse, a lot of them. So when I get a buy signal, I exit the short and go long. And some of them have either a profit target and or a stop loss. So sometimes I'll just go flat. So it really depends on the strategy. Whatever ends up testing well is what I end up going with.
All right,
Kev,
go
I
ahead,
want to ask
Dennis.
Kevin. I want to ask him a couple questions about
Sure, go ahead.
algorithmic trading.
Sure.
We don't get algorithmic traders on air every day. Just talk about the evolution of how you go from obviously being a manual trader, a point and click trader, to algorithmic trading. How does that whole dynamic work?
Well, for me, it was pretty easy because I was a terrible chart trader.
He's working with me now, baby.
Discretionary trading, I just couldn't do it. My emotions would get to me. Oh, should I buy? Should I sell? And is this a trend line shaping up? Oh, no, that kind of thing. So I have a math background and a technical background. Pardon?
At Michigan.
At Michigan, yeah, I did my undergrad there, and go blue. So I started just programming simple algos, maybe a moving average crossover and those kind of things. And it just kind of developed from there. And the real trick is in testing the systems. And so it's kind of nice when you can test something over, say, 10 years and find out, hey, this made money over 10 years. And then you watch a little in real time and say, oh, it's continuing to do good. And then you kind of go live with it. The problem with a lot of this algo trading is it's real easy to screw it up. It's real easy to over optimize or add too many variables and, create something that looked perfect historically, but it falls apart in real time. So that's where I see most people having trouble is they'll have a great looking back test, but as soon as they go live, it just falls apart. So it takes a while to understand how to do all that.
What about the programming? You do that all yourself then?
Yeah, I happen to use TradeStation, but there's tons of other software platforms out there where you can just program in the rules and apply it to a chart, and up pops, all the trades that you would have made during that time. So it's pretty slick, but at the same time, it's pretty easy to misuse, and that's what people really have to watch out for.
How do you protect yourself from coding errors where something happens and all of a sudden you're and you can be in a situation where maybe there's some orders that are sent that erroneously that you didn't want to send? How do you what's your process there for that?
Well, a lot of it is after I test it, I look at the results, just kind of make sure that when I thought it was supposed to be taking trades, it did. So that's one way to look at it. And then I usually let it run live and just watch and see what happens and see if it's making a bunch
of trial and error.
Yeah, you can see errors that way. Another great way now with these micro mini futures, the micro mini ES, which is 1/10 of the size, you can actually just run that. Instead of $50 a point, it's $5 a point. And that's a neat way to actually do it with real money and see what happens. And I've been finding a lot of people are starting to do that just as a test basis, because maybe it'll cost you $50 a week or something to run a test. That's pretty cheap to see if something works.
Dennis, do you got any more? Or do you want me to?
No,
pick
I
up
just want it
there?
back to you, Joel.
Okay. Before I'm going to do a couple more commodities here. We only got a few more minutes left, and we can perhaps do some more next week. We talked a lot about how the market performed, not so much the percentage performance when the market was getting killed, but Dennis and I both noticed that, we're getting some pretty darn good executions. I mean, I know there's slippage on stuff. Just from your perspective, during that excessive volatility that we had in March, how are, with you? I mean, obviously you have to use stops, right? You don't use stop limits, your executions. We kind of thought, I mean, I even got some positive slippage on stuff, but we just want to know how did the market perform in your opinion?
It was kind of all over the board. I mean, there were, I think on average, so if I look at that whole period of time and over a bunch of different markets, it was probably pretty close to normal. But you're right, there'd be times where I would get positive slippage, which was really weird. That's a congratulations moment anytime you get one of those. And then there were times where, like the ES, for example, normally the slippage would be a tick, which would be $12.50 a contract. And that was jumping up to 2 or 3 ticks every once in a while. So
okay, still not
some
bad.
fills, I was definitely getting nailed. But the one way I get around a lot of that is I tend not to trade a lot intraday. So I'm not taking 10 or 20 trades a day. I'll take a trade every couple days. So I'll stay a little longer term. And that kind of minimizes the slippage because obviously you're just not trading as much.
Excellent point. Do you find most of your trades, like for the ES, are they executing your initiations? Are they executing at night, off the 6 p.m. open, in the middle of the night, 9:30 open? Where do most of your initiations, when do you find them taking place?
A lot of them for me are right at the traditional stock market open. So the ES, is 23 hours a day, but there's also in TradeStation a symbol that you can trade just the day session. So it coincides with the stock market system hours. And so what I'll do is I'll actually just use that. And so a lot of times it's right around 9:30. I have some systems that wait like 10 minutes after the open before it executes. Just because sometimes if you try to execute right at the open, you get all kinds of crazy slippage. So what I'll do is I'll actually wait 10 minutes, then it kind of calms down and then take trades. So I do a lot of that too.
So you're basing your system only on the 9:30 to 4:15 data and not the full 23-hour and 15-minute market?
On quite a few strategies, yes, but I do also have strategies that do trade day or night. And a lot of them might actually enter or exit positions on, that 6 o'clock open Eastern time. So, it all depends. What I try to do is not do the same thing with all my systems. I try to do a lot of different things. And then that way, when I'm wrong, I'm not 100% wrong, Like
all right,
50%.
one more commodity here for you. And you're short coffee here.
Yeah.
How in the heck? What are you going to cover that thing? Holy mackerel. Coffee's volatile, isn't it?
Yeah. Coffee's kind of crazy. And I think I caught in early 2020, I caught that downtrend, a lot of that. And then I was getting chopped up in March and April.
I see it.
But right now I actually have a seasonal system that actually went short like the second or third day of June. So probably since looking at that chart, that second to last green candle, that I went short somewhere around there. So this happens to be a longer term system I have. So I'll stay with it probably at least another 10 points or so if it goes that far. And it might not. And that's part of algo trading is having to accept that sometimes things don't work out, and that might happen. But I have a big target on that one.
All right, Kevin Davey is the founder of KJ Trading Systems. That's where you can find more about his systems. You can also follow him on Twitter at KJ Trading. Kevin, thank you so much for the time today.
Thanks, Dennis. Thanks, Joel.
All right.
Thanks,
Spencer.
All right, 8:51 here, as I will bring us back on the screen here. Guys, Dennis, what are you seeing out there? And just same old story?
Yeah, we're just chopping around the imbalances. Let's go look at the imbalances, because that always gives us a good feel for where the market wants to be on the individual stocks. There is obviously significant sell imbalances, which you would see, but the opening indications don't look like we're going to get we kind of feel like we're kind of priced where we should be. Bank of America, 217,000 shares to sell, showing an opening indication of 24 currently. JP Morgan, 105,000 to sell. Citigroup, 162,000 to sell. Wells Fargo, 163,000 to sell. So you are seeing some relative weakness in the banks. The only sources of strength are the COVID stocks once again. If you look, Peloton, PTON is actually trading in the green. Netflix is trading in the green. We should move to Shopify because it's got a headline here this morning that is really moving Shopify up. SHOP trading up 35 points here this morning. Obviously a source of strength as well. The COVID plays are strong. What's the Shopify headline?
Yeah, Shopify announced this morning a partnership with Walmart.
That never hurts.
I will confess I do not know the details, but it's all in their press release right here. It's and they seem to like it.
They're also getting an upgrade from Piper here this morning, upgrading it
and
from neutral
raising
to
their
buy.
price target from 733 to 843.
So lots of good news here for Shopify shareholders. I wish I was still one of them. I am not. I keep hoping that this thing's going to pull back and give me a substantial pullback, but it just doesn't. I still think it's eventually going to $1,000. Yes, valuation's crazy with this company. You want to talk about a company that's firing on all cylinders, this is the one. So I love Shopify. Company does everything right. The valuation's really high. I wish it'd come in a little bit with the overall market so I could re-get my shares I sold around 620, but no luck here this morning for me. So anyways, from a technical basis, 700 huge. It's getting a little breakout here today.
800.
Let's see what happens. Let's see if you can get some follow through here. It's good news for Shopify this morning.
You mean 800 on that, right?
No, I think it's going to 1,000 eventually.
Oh, I thought you said
my own personal price target is Shopify over 1,000.
No, but you said 700 is huge. I think
700 support. The 700 support.
Okay.
We've bounced off it multiple times. So
Yeah,
you're kind of putting in another bottom, which makes me think I'm not going to get a shot in the 600s. So anyways, Shopify is just a stock that just doesn't want to pull back for obvious reasons. The company's awesome.
A couple things to point out here. You did pop over 790 a few times, 793.89. You are $15 off that. So high of the day may be in there. I think you might see sellers ahead of that. The other thing that I will just point out is that you had the big decline, basically from 844. Did you have that the 844 high? That was after that. I'm looking at like 770, 775. It's just kind of mid-range of this last little bump that you had. So keep an eye on that. Really, the best number for you, though, is that pre-market high, just under 794 for a potential long target. Don't think I could chase it long up $43.
Another stock up this morning because they're hard to find, so might as well talk about a few of them. IRobot is having a great morning. They're raising guidance. Yeah, guidance raise for the company. Woo! It's up $6. Another stock that I sold very, very poorly. I ended up selling this because I didn't want to take it through the earnings report around $59. And obviously, it's just continued to climb ever since there. And this was back end of April, and obviously the market's helped that too. A company that's been doing okay, I guess. They're raising guidance. I don't totally get it, why they're doing okay, but I guess maybe people don't want to go outside, so they got their little automated grass cutter, and they don't want to vacuum their floors. But the Roomba, or is it Zumba? It was Roomba. Is,
do you know?
They're doing well.
Yeah, we do have that.
You got the Roomba?
Not Roomba. iRobot.
Yeah, they make that. Yeah, they make the thing.
Right,
the vacuum
but we don't
cleaner.
have the Roomba.
Isn't that iRobot?
That.
What's the name of their
stock,
product?
Dennis. I know we don't. If you own a stock, you don't have to own
Oh,
the
you're talking
product.
a stock. Okay.
Yes, and you know where we
Who's
got
on
that
Confusing
first
from?
here?
conversation today. It must be
Yeah.
Monday.
Yeah, you're way off compared to last Monday.
Oh, the Roomba.
Okay,
That's what they make.
I
You said
wanna
I
give a
have it. So I'm like, oh, you have a Roomba.
let's give a shout out. And you know why? The only segments I really play for Lisa are when we had Bill Santiago on, and he was on and he talked about iRobot. And then she looked at the stock and stuff, and we picked it up. I think this was a while ago. It wasn't the
Maybe you
last
picked
time.
up from me.
No, it was. What was he on? He was on a couple of weeks ago, and then I think he was on back at the end of the year. I think in 2020.
Well, this is also a stock that our old pal Gene Munster likes, but
That's true.
Lisa didn't like it because he liked it. She liked it because
She
Bill
did like it. No, yeah, not because of Gene.
because of Bill.
Yes. I might have told her Gene liked it too. I can't remember, but I know she pulled the trigger on it after she heard Bill talk about it. So Bill, loyal listener, giving you another shout out there.
All right. So anyway, up this morning on a guidance raise, their Q2 guidance went from a slight loss on a quarter-over-quarter basis. Now they're saying their guidance for the quarter will be between $260 and $270 million. So about $90 million above the estimate on the Q2 guidance figure. You are off the highs of the morning
There
here,
you go.
but and I know Joel will highlight that fact, but still, like Dennis said, hard to find stocks up today. So
Yeah,
Yep.
so it's interesting when I'm looking at some of my filters and I see this trading up that much. I'm like, well, there ought to be a headline here, and obviously there is. So guidance raise is always a good thing. Again, I don't know where the guidance was coming from before pre-COVID, if they lowered it back before, and now it's a matter of them just beating that lower bar. But, we've talked about that, and companies do that. $83, I would say if I'm long this thing, I want to see it get up and make new highs, because if it doesn't, this could be one of those that fades.
Yeah, I agree. If I was in charge of this, I would try and sell
Lisa
it
in charge,
at
so.
85 today. That's the pre-market high. You've backed off that $4. That's not a great sign. Recent high of the move, if you want an intermediate target in there today, you got a couple highs at 81. Let's call it 81.70. I mean, you got some daily highs to key off. 81.70, 82.55, and the recent high of the move, 83.58.
2 minutes left here. Again, the theme is you've seen the defensive stocks, Kroger trading up, Walmart trading up, Clorox trading up, Dollar General, I just saw tick green. Full disclosure, I do have a position in that. It's the same story, a little bit defensive. The market's playing defense. What happens after the open is going to be the big question. Do they try to buy? I think they try to buy the dip a little bit. Let's see what they do at 3,000. So maybe they come in, maybe they buy us up. Do we fail again at 3,000 and start to roll over? Or can we get up above 3,000 and hold it? That's going to be the critical level.
Dennis, you're dreaming about 3,000 today. Okay. Forget about 3,000.
Why?
It's
we're 17 points away. You're talking. Yeah. Okay. No, okay. I'm sorry. I'm looking at SPY.
Okay.
So
because of the rollover. I got
the rollover screwing me up on the futures.
Okay.
So I'm looking at on the old, we'd be under it. So I'm screwed up because I'm looking at the SPY.
On the SPY, we're at 298. So we're not
298.
Yeah,
so let's say 300 on SPY.
I was a little hard on you. Sorry about that. For me, I mean, I tell you what I would do if we were opening up near that pre-market low, and that would be buy. But we're 40 handles off that. So I'll just keep an eye on early. I'll be watching mid-range on the session. That's 29.61. And then for bulls to get control here in the morning, let's get it above last week's low at 29.71. And then things open up to the upside. So that's what I'm looking at here for at least the first 15 minutes, half hours of trading.
All right, that'll be a wrap for our show today. Thanks to our guest, Kevin Davey. Thanks to all of you in our chats. Please don't forget to hit that like button and subscribe on YouTube. It is money for us in the eyes of the YouTube algorithm, so we appreciate that. You can always catch a replay of this show on our podcast or just rewatch it on YouTube. The podcast is available anywhere you get your podcast, pretty much. iTunes, SoundCloud, Spotify, Stitcher, Google, TuneIn. I think that's all of them. I don't know, anywhere you get your podcast, or just rewatch the show on YouTube. As I said, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice for those keeping track. This is a watch list of the stocks we discussed today. So the airlines, Hertz, Shopify, iRobot, and Genius Brands. We also talk a lot of indices and futures. That's all I got. So everyone have a great rest of your Monday. Joel and I will be back at 3:40 p.m. Eastern Time. Until then, be safe and good luck.